Disclaimer: the insights and opinions shared on this show are for educational and entertainment purposes only. Before making any financial decisions, we recommend consulting with a qualified professional to better understand your unique financial situation. Welcome to the Investors Playbook Show, where our mission is clear: empowerment through financial education. We firmly believe that financial freedom isn't a privilege. It's a right that's available to everybody. Each week, we dive deep into the world of finances, breaking down complex topics and making them accessible and actionable for everyone. As we grow this community, we invite you to join us on this journey. Why tune in? Because together, we're not just learning about wealth, we're building a movement, reshaping futures, and proving that with the right knowledge, financial success is within everyone's reach. It's time to get off the sidelines. Let's go.
Welcome to Investors Playbook, episode 23. I'm Cornell Rowan.
And I'm Deshaun Edwards. And today, we have a couple of announcements.
Wow.
See, I got you, bro. I got you.
Of course.
So something exciting is happening, man. Investors Playbook is coming up on its first official year of existence. February 28th, 2024. Well, February 28th, 2023 is when we started the LLC, the official LLC. And we are about to be a year in, man. That's very exciting. At the same time, February 28th is when we are hosting our next webinar. It is going to be about, Cornell, what's it going to be about again?
It's going to be about mutual funds, of course.
Mutual funds, yeah.
So this is how we got started in our investment journey. And it's really the safest way to invest in the stock market because how mutual funds are a basket of investments. So we're going to get all into that. We're going to show you what to look for. We're going to suggest different brokerages, and you can make a decision. And yeah, that's pretty much how we're going to swing that. And I'm actually looking forward to that. And also, we have a book fair coming up in April. We'll
April
get
20th.
Yeah, April what?
20th.
Yeah, so April 20th, and we'll get y'all more information on that.
Mm-hmm. Yeah. I'm going to be in Atlanta, y'all. Conyers, Georgia, right? That's where it's going to be at.
It's going to be downtown Conyers, man. So I'm looking forward to that. Usually they have a great turnout out there. The atmosphere is great. So yeah, I think it's going to be a good move for us.
Yeah, definitely. Those are the two announcements that we have, correct? I think that's about it.
I think we're good with the announcements, yeah.
All right, so now what we're going to get into this episode. Something very exciting happened last week. We all know Facebook. We all know, well, Meta, I should say. We all know Meta. And if you are like anywhere near the stock news, or if you keep up with stocks, or even just companies in general, or honestly, if you're just on Instagram, you probably saw on your timeline that Meta is now, well, they have introduced dividends for the first time ever on their stock. Now, people who are invested in Meta are going to receive dividends. And in this episode, we're going to first talk about that, how the news is going to affect it, or how the news has affected the stock, and pretty much dive into what dividends are exactly. Because it is a very exciting thing, and a lot of people choose that route when it comes to investing in stocks. Rather than going straight for growth, sometimes people just look for that residual income. But yeah, we're going to get all into that, right? But yeah, first, Cornell, let's talk about Meta, man. So what exactly happened last week?
Man, so Friday, Meta announced that they were going to start giving out dividends to its shareholders, and also they were going to start a $50 billion buyback program where they're buying back their shares. So apparently, this was enticing to investors, and the stock shot up 20%, which is crazy. Remember, people expect 7 to 11% in gains on average when it comes to the stock market. So for something to shoot up 20% in one day, it's insane. So
something even more crazy, Meta is not a cheap stock. Right now it's at $447. So imagine a 20% gain when your price is like, up there. It's kind of, yeah, it's just a lot. So yeah, Meta did its thing on Friday, and even in the after hours, it did, it surged even more. So yeah, that's when you're hearing about a company doing something that's for its investors, like that's the kind of positive news that will make your stock shoot up like how Meta's did last week Friday. But yeah, basically like Cornell was saying, it's a 50-cent quarterly dividend. So that basically, well, I guess we should start getting into what dividends are before we dive into the numbers of Meta, maybe.
Yeah.
Yeah.
So yeah, so basically, dividends is distribution of a company's earnings to its shareholders, and this dividend is approved by the board of directors. Yeah, so it's usually distributed quarterly. Of course, not all stocks do that, but most do distribute it quarterly, and it can be either paid out in cash or in more stock.
Mhm. Yeah. So essentially, it's like if you've ever worked a job and what do they call it? Profit sharing. That's that's what I think of when I think of dividends, right? Like the stock is doing great, or if you're working for a company, the company's doing great, and they, in essence, reward you for the the amount of money that they made this quarter, or just with stocks, it's usually on a quarterly basis, or a semi-annually, or an annually basis. And basically, that's what it is. Like it's supposed to show signs that a company is not only doing really good, it's not only growing, but it also has enough money to provide a gift back to the investors, saying thank you for investing in my stock, continue to be invested. And as long as you have shares of that company, you will receive whatever the dividend payout at, or the whatever the dividend payout is, or the dividend yield. So, and like you were saying, Quinn, companies dividends are, they're not really random, right? Like some companies give out dividends every year. Some companies give out dividends twice a year, four times a year. Some even give out dividends once a month, right? Um, but yeah, it all just depends on how well the company is doing, and what is like the, I guess, like the diamond in the rough for those companies that are growth and dividend yielding companies. Because a lot of times people think of dividends as like a form of, you know, income ish. They don't really look at it as investing in a company that's going to grow. They more so look at it as just residual money that they can receive every month or every quarter. But yeah, dividends are a huge part of a lot of people's portfolio. Go ahead.
I think it depends on the person, because for me, I look at dividend stocks that do grow. I'm not necessarily just looking for that passive income or that cash flow, because there are plenty of stocks that have better dividends than the ones that I'm invested in. But the reason
Yeah.
I'm invested have is because I can also expect that growth. So I'm talking about like my Apple, my
No,
but Microsoft only gives you 0.75%, where I could be investing my money in things like AT&T, where they give you 6 point something percent. You get what I'm saying?
but
Because
it's not growth.
it's not growing. Over the past 5 years, AT&T is down 20%. So is my stock's growth more important than the dividend yield? Yes, it is for me. So I tend to stray towards those.
Got you. And yeah, I think it really, like you said, it depends on what the individual is looking for, right? Because sometimes you can, well, no, in most cases, you're going to get more money for the growth stocks than you do with dividends, because the dividend payback is, I mean, you talk about some are like 6%, some are 4.9%, some are 0.5%. It really just depends on the company. But you have stocks that grow like 12% in a year, right? So I think again, it can be in addition to the growth stocks, but people who solely look for dividends, um, yeah, they just I don't know. They have their reason. I don't know exactly what it is. Like they see the benefit of having a consistent income rather than um, looking for companies. Maybe they just don't want something that's so volatile or something that can rise and fall so quickly. I don't know. You know what I mean?
But would you call it volatile? Because I don't know. Like when I look at the chart for like Microsoft, and they did have that drop in 2022, of course. Pretty much the whole stock market did.
Everything did. Yeah.
But if you're looking at the chart, it's pretty much a steady. Like I can see if you're getting close to retirement, then I can see why someone wouldn't want to do that.
Right.
But
And I think
then
that.
wouldn't
Or go ahead.
but then wouldn't your money be better off in like a treasury or a savings account? You see what I'm saying? Because you can get 4% and you don't have to worry about the downturn. Because if you're losing 20% after 5 years, that dividend is null and void.
Right.
It is
Yeah.
you're basically not doing anything. You're losing to inflation.
That's true. So I mean, like I said, maybe it's just situational. Because some people do, when you think about the amount of money that you get from like a stock increasing and the amount of money that you could get from dividends, dividends can actually become income. Like, right? If you have enough of it, you can use it as a way to like sustain. Your stock is growing, you can't necessarily take that out because then it'll stop growing. You know what I mean? So if someone is, like you said, maybe close to retirement, or they want to trade their income that's happening right now with making income via just the stock market, maybe that's the reason why people look towards dividends. Um,
No,
because go
I was
ahead.
speaking to that. So I was saying, and if you're scared of if you're closer to retirement, like what you were saying, if you are instead of investing in something that could possibly fall, why not put it in a safer account, like a savings account, if you want that small, because that also is income that you can just use. You see what I'm saying? When you're getting that interest, you can use it whatever way you want, just like a dividend.
Yeah,
And you don't have to worry about something falling.
yeah, I guess I get what you're saying. I don't know. Maybe there are other ways that are better than dividend investing. But what Meta did apparently had a lot of people cheering. And it might just be because Meta is also a growth stock. It's not just a dividend yielding stock. It's a stock that's doing well. It's a stock that's growing. And now they're offering dividends. So it's like, in addition to being a great stock, you're also giving people, money back for being investors in the stock market.
Yeah.
So, yeah.
So so you're right. Meta's doing really well. It's actually year to date, it's up 37%, which is crazy. Remember on Friday it went up to Friday alone, it went up 20%. Over the
Mhm.
past year, it's up 155%. So that means you doubled in a half whatever you had in there if you were been invested in Meta for over a year.
That's crazy, man.
Which is dope, man. Is in the past year is almost on par with Bitcoin because
Yep.
Bitcoin went up 170%.
Yeah. All right. So I know that I guess we talk about the small advantages. Some of them they can like, reduce portfolio volatility. They can be traded off like for income. But I mean, the reality is dividends can definitely go away too. Like a company can just slash its dividends if they wanted to, right? There is no guarantee that dividends are going to stay simply similar to like a savings account interest rate. It can fluctuate. A dividend yield can also fluctuate or just go away completely. So I mean, I know that they say portfolio volatility, but at the same time, dividends are expected to not move, but they can definitely change. Like during 2020, when everything was kind of up in the air, a lot of companies just got rid of their dividends completely because it was just too much unpredictability about what was going to happen. Some brought them back, but that in enough is just saying that dividends, though they sound safe, I guess I should say, um, it's not always so true, right? And I think it's more just like a cherry on top of what's already happening. But people swear by them. A lot of people just only find stocks that have dividends, and put enough money into them to where they're receiving a set amount of money every month. Um, but yeah, that doesn't mean that that's always going to be there. And then also, the money you get from dividends can be taxed. If you're not like just reinvesting that money into the stock and you're just actually taking it as income, it will be taxed as income. So
So if you're so you're not taxed if you reinvest it.
I don't think so. I don't know.
I'm not
I don't
sure
know if
on
that's
that. I'm
okay.
sorry. I'm not
No, I
sure
said
on that
I don't
one. I'm not sure on that one because when I look at my tax sheet, I know the dividends still are on there. So I don't know if that's we might have to look into that one. So I'm not sure if we're taxed, but I think that you're getting the dividend and they automatically buy the stock. So I don't think that it's
know. So you think it's still considered income regardless. Like
yeah.
even if it's being bought back into the stock market, it's still income. Yeah.
I
And
feel
that,
this way because, and I'm not sure. I feel this way because I did have to pay taxes on my dividends
oh well then you
last
probably
year, but I don't
yeah.
know if it was like a dividend that did not go directly into a stock because I did sell. Sometimes you'll sell some things after the ex dividend date, and basically the ex dividend date is when you have to have the stock. You have to hold the stock, see the dividend on whatever date that so sometimes if you say you hold a stock up until the ex dividend date and then you sell the day after, you're still going to receive the dividends from that stock.
You have to have held it for a certain amount of time. Like for Meta,
Just no, just
okay,
before the ex dividend date. Once that dividend date passes, you're good.
okay. Because I think Meta's ex dividend date is February 22nd. And then the payout is sometime in March.
Mhm.
So if you want to take advantage of the Meta dividend, buy Meta before February 22nd, and you'll get paid out a month later.
Yeah.
Something like that. So, okay.
So
So
of
I guess in
course,
your opinion, oh, go ahead.
looking at dividends, they seem very small. Like, Facebook, it says 50 cents per share. And of course, each share is like $400. All right.
Hmm.
So dividends start to add up as you're long term investing because, every check, every 2 weeks or every month, however you get paid, or every week, um, you're putting into the stock market. You're putting into these stocks, and then over time, is growing and growing and growing. Also, your dividends are being reinvested into these dividend stocks if you decide to do that, and it continues to grow. And then when you have a large number of shares, you're getting paid a lot more. So yeah, with one share, you're getting 50 cents. But if you have 100 shares, you're getting $500. You see what I'm saying? So it's a it's a difference
Right. Right. So yeah, similar to
for $50.
I was gonna say, I think the math
Fifty
might be
dollars.
a little off on that.
Yeah, my math wasn't
Uh,
mathing, but yeah, I got it right. 50 dollars.
but yeah, so similar to just any I mean most things with money in general, but like we'll just use a savings account for example. The more money you have, the more money you're gonna get on your return. Just like with dividends, you have more, you get more back. Um, so yeah, I think that it's more it can be almost seen as like a cherry on top for those growth stocks. In addition to them doing well in the stock market just in general, you're also getting that little 0.5% back. And you'll notice that a lot of growth stocks that do have dividend yields, it's not going to be anything more than like 50 cents or like more than like 1% because a lot of their investments are going to go back into their company, and the money that they give to the shareholders is just like thank you, but we're not relying on you all to invest in us because we're giving a large dividend yield. We want you to invest in us because we're doing good as a company and our company is growing. But then you have some companies who literally waive that we have great dividends, invest in us so that you can get a good dividend return. And I guess to you, those are the ones that you're saying like you don't mess with those. Like
Wait,
for example,
is it like Ford like that?
Well, yeah, a
Oh,
little like Ford,
interesting.
because Ford has a almost 5%, dividend yield.
Mhm.
So, for example, if you put $1,000, if you have $1,000 in Ford for the year, you'll get like $50 back.
Quick question. Okay, so you said how much is the dividend yield?
4.94%
Okay,
for Ford,
how
right?
how much has Ford gone up in the last year? The stock.
Oh, it has not. I don't know, maybe like $1 or
I'll
something.
help you. I'll help you out. It went down 7.61%. So it actually decreased more than its dividend yield. So this is a prime example of what I've been speaking on about, being careful. Don't simply look at a dividend and 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 feel like it's a good investment. Because yeah, 5% looks enticing, right? But if you're losing 7% in a year, then you're negative. You're down.
That's
So
1 year though. That's 1 year.
it's 1 year, right?
Let's
Right.
let's look back. Let's look back at Ford. All right, so look back. Let's say Ford 2020 was at $5. 2021, $10. 2022, $20. And
And then,
2022 was when a lot of stuff went down. Like everything went down in 22, bro.
but
Everything went down.
but last year was an amazing year in the stock market. Am I wrong?
You are not wrong about that.
And
Ford just did not follow suit with last year.
in
You're right.
2022, Ford was standing at $24. Ford is cut in half since 2022. So depending on where you got in, of course, you could be up,
Mhm.
but
Mhm.
there's a big chance that you're not up if you've invested somewhere within the past 5 years.
Right. If I invested like basically after 21, but before, no, just after 21,
During 21 or after. Yeah.
during or after 21. Yeah, because it had its up, but that's the thing, right? I When I looked out for
Right.
it and I saw the dividend yield, I saw potential. I saw the and this is like me researching for it. This is me seeing that Ford is changing from this steady stock who just does not do much, just stays like right around $10 to becoming something that it's never been, right? The last time Ford was up here like this was in the 1990s, bro. Like the last time Ford went above $20 was 98.
But see that's not scary though. The fact that it was like that 10 years ago and now we're seeing a lower price, that's not scary.
Oh no, 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 it is for sure. Well, I wouldn't say scary because I'm not like dumping buku money into Ford. You know what I mean? Like it's little by little. I'm like purchasing a little bit. Like it's not. I don't have tens of thousands of dollars in this stock that is clearly not doing as
Got
good as other stocks.
yeah.
Um, it's just more like my research experiment to figure out if Ford does decide to, come out with some new technology. Because I think Ford is a really old company, and
Yeah.
in all of the research that I've done, I don't quite understand why such a reputable company like Ford doesn't move like any other car company. Like I don't know. And that's what's interesting to me. So um understanding like how much I would get back in dividends, it makes me put like, a little bit into Ford every now and then. But for the most part, it is it's like something that I just put additional money into, but it's nowhere near close to like my primary holdings at all. I do like the dividend yield on Ford, but when I was investing in it, when I was learning about like all the things with Ford, I was hoping that Ford was going to also become this growth stock because of all the new technology that they were introducing, like the electric cars and how they were saying that they were going to be competing
Yeah.
with Tesla. It just didn't happen. You know what I mean?
So
So
I think Ford is moving like all the rest of the automotives except for Tesla. And
yeah.
this is why I'm scared of Tesla because actually all the like Nissan, Mercedes, all of them are down like that.
Yeah.
You see what I'm saying? So
Yeah.
I don't think Ford is the issue. I think it's just the sector, especially
It might be.
because yeah,
Yeah.
especially because we have this new directive to car companies that we
To cut off gas in like 2035 or 2050 or something like that.
yeah, so everybody's kind of going towards that. And, Tesla, this kind of inflated Tesla, I feel like. I know there are people that still have high hopes for Tesla. I just feel like Tesla grew a little bit too much too fast. They don't have the revenue to back it up because Ford actually makes more money than Tesla. You see
Hmm.
what I'm saying? So I don't understand why Tesla grew so much in market cap while you have these other automotives like Mercedes, Ford, very reputable businesses like you said, uh, and they're a need, they're a necessity, but they're not growing. The stock is not growing the way Tesla is.
Yeah. Yeah. That is an interesting topic. Um, so, but yeah, as far as dividends, that is why Ford is like near the top of my dividend list because it like that is one of the companies that I'm looking at because of their dividends. And there are tons of companies that are growth plus dividend stocks um, that are probably doing a lot better than what Ford is doing in regards to the return, right? Because Ford is not only like it doesn't have the best dividends, right? 5% is okay. I mean, it's good, but you have like AT&T, I think is like 6 point something percent. Both companies are neither are growth companies though, right? Um, but yeah, dividends are more like a cherry on top, or I guess for certain people it can be considered income because it is money that you don't have to necessarily keep in the stock market, but can help you, or it can go towards your income. And that might be like to me, that might be the only advantage of looking at dividends or looking at stocks that solely give you high dividends that are not growth stocks. It's so that you can take the money and then use it immediately. You don't have to like withdraw money from the stock market. But then, like you said, there's savings accounts who also have almost the same amount of interest return or APY. So I don't know. This just begs the question: do you think dividends are just like, well, people shouldn't necessarily focus on stocks that just give dividends? What's your recommendation?
So me, I like growth stocks that also give dividends. And my thing is, I don't take my dividends, even though I could. You can take your dividend, you can go to the grocery store, you can go to the
Mhm.
wherever you want to go. But as far as me, I like to reinvest my dividends
Right.
because as I'm reinvesting my dividends, that money is going back into the stocks, and then I'm getting more dividends the next time because I have more of that company. You see what
Mhm.
I'm saying? So say I have 100 shares of Microsoft or something, and I'm just throwing out a number, and say my dividend is enough to buy me another share, so it automatically reinvests. Now I have 101. Now I'm getting more in dividends because I have more shares of Microsoft.
Mm. Yeah.
So I like to recycle my dividends, let it compound, let it grow because I don't need that money right now. And I might, you know, when I retire, I might be looking to find investments that are safer, like a treasury or maybe even fully dividend stocks, like you said, like Ford, because it hovers around. Uh yeah. But as far
Yeah.
as like while I'm young, I'm looking for something more aggressive. I
Yeah.
am looking for something with more growth opportunity
Yeah. And
because I still have 25 years until retirement age. A
yeah.
little more than that. Yeah, I don't see a point in me, everybody's risk tolerance, everybody's plan is different, but I don't see a point in me putting my money in something that barely grows or doesn't have a great track record of improving. And also with dividend stocks, and I meant to mention this earlier. A lot of dividend stocks grow their dividend over time. So it's not just like a 0.5%. Usually yearly, great stocks will announce that they're upping their dividend by maybe like 8% or something like that. And
Mhm.
if you look at these stocks and look at the dividends over the years, they improve. And Deshaun mentioned earlier that sometimes people will just cut their dividend. This is a warning sign for most investors because it shows that there's turmoil with their business. Something is wrong.
Yeah.
So this can cause a decrease in the stock price, a sharp decrease because everybody's trying to exit because, oh no, something's wrong. They're no longer paying these dividends that they used to. They're no longer growing their dividend. Something is amiss.
Yeah. Yeah, it can definitely be shown as a sign of financial health, um, increasing and decreasing. So yeah, I I don't know. You just explained it pretty well, bro.
I appreciate that. Appreciate that.
You explained that pretty well. Yeah. Um, it depends a lot on your situation. You know how aggressive you're looking to be, um, and then what you're just trying to get out of it. So yeah, dividend stocks can be. I guess I won't even call them dividend stocks, but stocks that offer dividends, right? Because at the soul of it, they are just stocks. They are companies that you can invest in, but some of those companies offer dividends or profit sharing for the people that are investing in them. Um, and yeah, some people just use it as a strategy to get additional gains, but for the most part, dividends are not going dividend stocks that have dividends that are not growth stocks are probably not going to outpace a stock that is growing and has dividends to offer. So that can be, a nugget to take away, some potential stocks to just look at if they are offering dividends. Look at their 1 year and even go further back. Look at their 5 year. See how well the stock has performed in the last 5 years and see if the dividend is worth it. Um, that might be a sign that says, yeah, this dividend is offering 6%, but the stock is lower than it was 5 years ago. So is it really making me any money? You know what I mean? Doesn't matter how much money you put into the stock. If it's not growing faster than the amount of money that could go into a growth stock that also gives you a tiny dividend, might want to readjust. So yeah, man. It's a lot that goes into dividends, but essentially that's it in a nutshell. It's just a way to pay back its investors for investing in the company. Is it?
No, I feel that.
Yeah.
And y'all, one day I'm gonna convince Deshaun to get out of Ford.
I
Maybe it's
ain't
not today.
never. I'm never letting go of Ford, bro.
Maybe it's not today, but one of these days, Deshaun is going to sell Ford.
Matter of fact, I'm about to put more money in Ford. Hold on, where my phone?
One of these days, people. Yeah.
Man, when I'm old and all my hairs are gray, and Ford is paying me $10,000 every quarter, watch, bro. I'm gonna
ten
be straight.
thousand dollars. Hey, I feel like it's
Uh,
highly possible, man. 5%. Yeah, nice. It could. Hey, while I'm playing, maybe.
yeah, just increasing that income, man, for
Yeah,
later. For later, it ain't really doing much of nothing now. I get a little bit from Ford, but
little something.
yeah, yeah. But yeah, man. And dividends are interesting. Dividends are interesting. Just another way to make money in the stock market. You
Facts.
know what I mean? Yeah, another way to make money. But
Well,
yeah, I think we kind of hit it all, Cornell. What you say?
I think we're good. Do you mind telling them where they can find us?
Absolutely. So you can catch us on YouTube, on Spotify, on Apple Podcasts, wherever you listen to your podcasts or watch your, financial educational videos. Investors Playbook LLC. On YouTube, you can just search for Investors Playbook on Spotify and on Apple Podcasts, or again, wherever you look for podcasts. You can also find us on Instagram at Investors Playbook LLC. We have our Mighty Networks channel. If you want to join the community where we talk about financial topics on a daily, we answer questions, we host lives. That's going to be on our website if you're interested. And we also have our book, 6-Step Process to Financial Freedom. It is February now. We are in 2024. It is February now. You have tons of time to start this process. If you are interested in learning more about it, catch it on Amazon. You can either type in Deshaun Edwards, you can type in Cornell Rowan, or you can just type in Investors Playbook, a 6-step process. So, yeah, get off the sidelines. That's it.
And if you like our content, make sure you like and subscribe and share it with someone who can help for sure. And as always, thank y'all so much for tuning in. We love
Definitely.
y'all.
Appreciate you. Appreciate you. Always appreciate the support.
Always.
All right, man. Cornell, another good one.
Another good one in the books, man. Good stuff.
Sir.
Have a
Yep.
good one. Peace.